Never mind the heat, it's Accountech Bytes, your sizzling selection of bean counting bells and whistles with me, Tom Herbert. Thank you for tuning in, and as always, if you'd be kind enough to like, subscribe, or follow, that would be great. Let's get into the news. And we start with news from Reuters that QuickBooks and TurboTax parent company Intuit is cutting 17% of global jobs, around 3,000 roles, in order to streamline operations. According to an internal email sent by CEO Sasan Goudazi, the move is intended to reduce organizational complexity, simplify the structure, and help Intuit deliver better products, focusing on its key bets, such as AI. Goudazi, of course, famous for betting the farm on AI, well, 7 years ago now. The move comes as software company shares continue to slide as investors fear disruption from artificial intelligence players. And despite moves by Intuit to pipe more artificial intelligence into its products. So this year we've had the likes of Intuit Intelligence, the AI assistant in its product, and of course the Intuit Accountant Suite, the practice platform designed to replace QuickBooks Online Accountant. It's another development when it comes to those larger accounting software providers and how they drive genuine change, genuine innovation in this era of AI. Can they get there with a good plan, training, and the right skills, or do they need to level the current systems and build again from the foundations? I think we have an answer from Intuit. A new one from The Finance Story. Not sure I featured them on the video before, but this is an interesting perspective from US top 20 firm Citrin Cooperman. Its managing director says that AI isn't killing offshore accounting firms. In fact, they've tripled their hiring in India, increasing headcount from 300 to more than 1,000 and still hiring. The firm reported 985 million in revenue last year. And as I posited on the video before, I think a lot of these job cuts that are being attributed to AI, I think there's probably an easier answer in the form of offshoring. Now, I mentioned bean counting in my intro. Here's a story about literal bean counting, and purveyors of average coffee Starbucks has announced it is scrapping its AI inventory tool across North America. So this was an AI program that workers at the stores used for automating certain inventory counts, but the app frequently miscounted and mislabeled items and was finally sent to Silicon Heaven after continued employee feedback. Interesting piece here from Computer Weekly's Anna Matani. A survey of 2,400 UK professionals revealed that they're stuck in a copy-paste economy, working sort of as middleware between disconnected AI systems. So a quarter of UK employees were losing more than 7 hours a week to disconnected AI systems, with the companies seeing the most value from AI, building it directly into systems where their people, data, and work come together. Now, surprisingly, first mention on the show for Pope Leo XIV, who has written an encyclical on artificial intelligence and the future. I'm not a religious person myself, but this is an incredible piece of writing that argues humanity faces a pivotal choice: either construct a new Tower of Babel, a sort of hubristic display of power, or come together and build an AI future where humanity can dwell together. Now, this is very long. I wouldn't recommend everyone to read it, but if you're involved in developing AI, I would recommend you take the time. There's a lot of history and humanity in it. You can also sit in a coffee shop and ostentatiously scroll through. Oh yeah, I'm just reading Pope Leo's latest. And there's also a reference from Gandalf the Grey as well. So it's a sort of holy trinity of AI, the Catholic Church, and Tolkien. Anyway, on to other things, and Carl Flinders from Computer Weekly reports that software villains Fujitsu have finally been thrown out of the post office in a £500 million replacement deal. So Accenture has won the contract to take over the running of the controversial IT system at the heart of the post office scandal, where more than 1,000 postmasters and sub-postmasters were wrongly convicted, thanks to faulty software. Finally, a bit of partnership news, and top 10 firm BDO have announced a tie-up with mid-market cloud accounting tool iPlicit to focus on business process outsourcing. Now, I know I say this every week, but this week really is your last chance to get your entries in for the Accounting Excellence Awards. Entries close 2nd of June. So if there's a firm, business, or individual you would like to nominate, it's accountingexcellence.co.uk for more details. Let's head over to MTD Corner now, where LKA's Director of Tax, Robin Milstead, has waded into the muddy waters of MTD software for us. With just over 2 months to go before the first mandated quarterly deadline, making tax digital software confusion is growing, and taxpayers risk discovering too late that the product they chose can't do what they thought it could. At the heart of this confusion is the term HMRC recognized software. At time of writing, if you Google that, one of the top results leads to corporation tax software. A harmless mistake, but one that could get your sole traders and landlords in a fair bit of bother. And for taxpayers, phrases like HMRC compliant, MTD ready, and digital tax software, while they all sound the same, they are very much not. And staying on MTD, hit the deck, Lucy Cohen, co-founder of challenger firm Mazuma, AAT president, and 482 hamsters are also worried about MTD. So MTD was announced in 2015, I remember it well. It was finally launched for income tax in April 2026. Apparently, the gestation period of 6 elephants, 3 giant pandas, 4.5 white rhinos, or if you measure it in hamsters, 488. We seem to have gained 6 since the intro. Anyway, the point is that the current system focuses on digital tools, getting those numbers into the boxes. But while those figures might look accurate, they are likely to be systematically wrong. Just by way of example, Lucy took 20 years of Mazuma's micro-business transactional data and mapped it out and found that 18% of entries in a fully reconciled ledger have no corresponding bank entry for the same period. If you're affected by MTD in any way, I'd thoroughly recommend reading this and the piece that preceded it on banks and MTD, which, as you can see from the reaction count, has caused quite the stir. Spurred into action by an email from Sterling about their accounting solution, Lucy makes the point that tallying is not accounting, categorizing is not bookkeeping, putting numbers into boxes and submitting them to HMRC is not enough. Now, I had Sterling on the podcast a little while ago, and they made the argument that for a certain section of clients, the ability to self-serve for those repetitive quarterly tasks, allowing accounting professionals to step in at year end and ensure compliance was where that fitted in. However, going back to Lucy's point, I do feel that launching this accounting solution without an accountant portal was a misstep. Anyway, on that note, High Street Bank Lloyds have announced a partnership with Bankify to launch an integrated MTD solution for small businesses. The Bankify CEO tells Fin Extra there's a war for small businesses in the UK when it comes to business current accounts, and Making Tax Digital is another tool in the toolbox for that. Let's get on to some new stuff now, and Swedish fintech Mimo has launched bank and balance sheet reconciliation agents in its associate platform, so taking some of that automation workflow deeper into the financial close process. Cloud accounting platform FreeAgent has announced 3 VAT improvements, including an automated VAT checker that identifies potential anomalies in each return, a full VAT report that includes a VAT percentage column so the tax treatment can be reviewed at a glance, and a show transactions report that now includes an attachment indicator, making it easier to see which transactions have supporting files and which may need following up on. And FreeAgent has also integrated with PayStorm. They're a new one on me, but it seems to be an automated credit control tool that will plug into FreeAgent and automate the chasing of late payments using your own email. Bright has introduced an AI agent called Oscar that plugs into the system and chases new employees for things like P45s, bank details, and proof of address via WhatsApp and ingests them into the system. Thank you to Bright's Chief Product and Technology Officer, Ben Bishop, for talking to us about Oscar and the work that's gone in behind the scenes on building Bright's AI foundations. And finally, document management practice management tool FYI has announced a couple of integrations. So FYI now integrates with Proposal's billing and payments platform Ignition, and also with anti-money laundering and client compliance platform AMLCC. And that's your lot for today. Thank you very much for watching. If you'd be kind enough to like, subscribe, or follow, I'd be very grateful. Stay cool, and I'll be back next week with another video. Bye for now.